When you look at the trials and tribulations, the stocks almost at a record high, but then these legal concerns for President Trump, where does the market get its cue?
So I think we can see overnight that the market's not actually paying that much attention to the political side at the moment. It's still much more on what's going on with earnings season. I would just say, obviously, the market high, absolutely, but not a PE high, right? We are in the longest economic recovery as well as the longest bull market, and the two go hand in hand. And the earnings growth that we're seeing, particularly through earnings season Q2, is 25% earnings growth. That's underpinning those levels.
Do you worry that actually the tax cut was implemented at the wrong place, which is why we're seeing kind of strong momentum, but as soon as that runs out, you kind of have end cycle plus tax cuts running out?
So we upgraded our earnings growth forecast by about 7% on the back of the tax cuts. So there is some upside from that, but it's not only the tax cuts that are in that earnings growth number. There is fundamental GDP growth, which is driving the profit growth as well.
Okay, Thanos, a lot of, I guess, the market plays in currencies, right? Again, are you surprised that geopolitics does not seem to be at the forefront? Is it because markets don't know how to price it?
No, I am surprised that it's not at the forefront, especially if we look at the VIX as an indicator of volatility. It's still at the 12 handle or 13 handle, despite the concerns about the tightening of policies, the beginning or worry about inflationary pressures coming through after these very strong levels of growth. And currencies have not been representing that. We have seen very sort of benign volatility across the developed market currencies, whereas in the emerging markets we are seeing a little bit more volatility on the back of the specific idiosyncratic EM stories.
But does the politics actually trump any kind of monetary policy chat in Jackson Hole, or will the market still be trying to look for kind of shorter term, medium term clues?
I don't think that the Trump discussions will have an impact on currencies. I think the market is seeing slightly through that. We've seen the yields, for example, the Treasuries fall overnight rather than spike. If there was any concern that there was some verbal intervention from the presidency in terms of influencing the FOMC, then the first thing which would move would be the spike higher in yields. This has not happened. I think the recent movements we've seen is probably because of the low sort of liquidity in the holiday period of August.